Hey everybody, it's Mike from Orderflows, and happy Fed Day. Hope everyone had some fun today in the markets. It was pretty crazy afternoon once the Fed came out, but in the morning going into the Fed um, meeting, it was very quiet session. You can see here, basically we're trading between 85 and 95 more or less. And then when obviously the announcement came out, market sold off immediately, but as normal. Seems like the new Joe Biden era, Bidenomics. When you have something that should be bearish for the market, instead market rallied, and the market rallied up to new highs. I believe it was 39.25 ish or thereabouts, and then it sold off, which it should have initially. Should have just kept selling off, but it was just really interesting in the order flow. Now, people always ask, gosh, how do you trade these Fed days? Well, one, if you don't have to trade, stay away from them. But, if you're a junkie, an addict, and, you like the action because Fed days really give you a lot of action. It's a snoozer up until 1 o'clock, and then the fireworks happen. But, the one thing that I learned very early on on the trading floor, the CME, is, on these Fed days, it'd be interesting because I remember I'll say my mentor, but the lady that taught me a lot, Donna, she I'd been on the Board of Trade, on the CME, and she says, look what happens when the Fed announcements come out, right? It's the retail reaction, right? The big traders, they're just sitting back, right? They're waiting for the market to settle down. And, once the market settled down, you got that big trend down. And on a day like today, which is going to be volatile after the announcement comes out, anything inflation related, CPI, obviously Fed announcements, then you're expecting some fireworks. And if you're trying to trade on a 1 minute chart, you're getting some massive bars. You're seeing a lot of volatility come into the market. This is a simple 1 minute footprint chart, and you're looking at bars that are, obviously, take away the bar that's on the first two bars after the announcement, but afterwards you're looking at bars that are 15, 20 handles. Okay, I don't like to look at bars that are 15 or 20 handles in the E-minis. NASDAQ, it's kind of normal, but in the E-minis, I prefer something that's manageable. And on more volatile days, or market conditions that are volatile, obviously, if CPI comes out, it's one of those days. Fed day comes out, I go to a smaller time frame. I try to take advantage of what's happening right now. Really, with the order flow, the strength is in reacting to what's happening now. And on volatile days, if you're on a minute chart, you're way behind. And I like to go down to a 30-second chart. That doesn't necessarily reduce, the risk, because obviously, I'm going to take every trade and try to run it for as much as I can, but it can reverse on you just as fast, as any other chart. So, again, going up into the Fed announcement, very quiet, snoozer, it's one of those things you're just sitting around twiddling your thumbs, waiting for the fireworks to happen. Sorry about that. And let's be honest, you and me, we're not economists. Me especially, I don't claim to be some fancy guy. Oh yeah, this is what it's going to happen in the macro environment, etc. Heck, when I worked at JP Morgan, we had our economist there. Was his name Dave Fernandez? He was like, he was the economist. He was the guy that always goes on CNBC. And if you look at his bio, I could see it internally, but if you go to his LinkedIn page, he did his PhD. His advisor was Ben Bernanke. So, these guys that are economists, yeah, leave that stuff up to them. We're traders. We trade. All right. Forget that economic mumbo jumbo. What's happening in the market? How can we trade it? Okay. So the number came out. What I like to look for. Okay. I'll just tell it up front. It's real simple. Look for those imbalances coming into the market. Precisely stacked imbalances. Okay. I'm not necessarily so concerned with multiple imbalances, because I know there's going to be multiple imbalances pretty much in every single bar because there's a lot of volatility. But what I like to look for on volatile days or volatile situations is stacked imbalances, because it's often the result of a big order hitting the market. Buy me 750 E-minis, sell me 1,200 E-minis, boom. And they're just orders that aren't like, oh, sit there and try and finesse it, because the market's moving so fast. that the execution desk, right, the traders on the execution desk, no, they better get this order filled. Otherwise, the market's going to be trading 10 points higher or 10 points lower, right? So if they're trying to buy 1,200 E-minis and the market's trading, 38.90, and they're trying to finesse it, then they just finesse themselves out of getting any more orders from, that PM, because they screwed it up, right? They should have got filled probably around 38.92 because the order came in, it was trading 38.90. Next thing you know, it's trading 39.05, 10 points higher. So by going to a shorter term chart, so to speak, a 30-second chart from a 1 minute when things are volatile, and looking for stacked imbalances, really what I'm trying to take advantage of are those big orders coming into the market. Okay, so again, you're not going to trade probably the first 3 or 4 minutes after the announcement that comes out, just because it's just too freaking volatile, right? I mean, who's going to trade on Fed announce something? You could be as fast as you want, right? Have your order queued up, ready to press enter. But all those HFTs that are co-located right next to the exchange they're going to be ahead of you. They're half a millisecond. You're maybe as close as you and me can get is probably 5 or 10. All right, so thinking you're going to be very fast by sitting in, on your at home trying to hit the enter button, you're going to be very late, right? You're going to be very, very late. So you can see, obviously, it dropped from, the 39.05 immediately down to 70, okay? But then it starts settling down, and really, again, this is a 30-second chart. What I'm looking for are buying or selling imbalances, okay? Sort of going with them. So there's selling imbalance here. Okay, selling a balance here, market rallied back up. Now, when I see stuff like this, okay, to me, these guys are stuck. They're trapped. I don't like to just say, oh, there's an imbalance. I got to go trade it, right? I will watch the order flow, right? I mean, I'm not going to give you, I'm just telling you, you look for those stacked imbalances as a result of a big order, but generally the volume will fill in. But if these things are just hanging up there, right? If I got a big stacked imbalance and the market rallies back up, and then it starts trading back down, I see selling imbalances coming into it. And if we're going to take out that imbalance again, yeah, I'm going to get short, right? It's not just, oh, there's a selling imbalance, get short. No. Let the market tell you that, yeah, there's continued buying, right? When I see something like this is what I call an inverse imbalance, right? It's a stacked selling imbalance at the bottom of a green bar. Right, these guys are stuck. This is what trap traders look like. It could have been just a stop that got triggered here, most likely, but the market reacted back up. When I see something like this, to me, this is a great little scalping opportunity to get long. As soon as this bar starts turning green, it starts trading higher. That's my cue to get long. But again, it's not on a volatile day. I'm not necessarily. I'm in and out. I'm in and out. Right. It's not one that you're going to be looking to ride, although there are some nice trends, on a day like today. You just I don't know, you got to be careful. Everyone trades differently. Here's a nice stacked buying imbalance, okay, but it didn't continue. Market came right back down, still green. I'm just waiting for the retest to come back up, take that out, right? We took it out right here, boom, right, went higher. Right, here's a nice stacked buying imbalance, right? We traded all the way up here, right? Bet imbalance came back at 57. Okay, but then, we couldn't really, we went higher in this bar, but we couldn't build on it. Then the next bar trades right down into it, right? Not a good sign. What else we got in here? Okay, it's a nice stack buying imbalance. I'd prefer to see, I've done analysis on where the stacked imbalance occurs in a bar, if it's, in the middle, at top, at the bottom, is there any significance to it? Not really. Honestly, I didn't really find anything. Okay, I wish there was something. I wish I could say, yeah, you know what, you got a stacked imbalance at the top of a green bar, go with it. Yeah, it's not as simple as that. I like to just, okay, I got that stacked imbalance, wait for the market, just sort of keep going in that direction in the next bar or two, just like here, right? Stacked imbalance, nothing happened, but then the buying reappeared and got through it. That's what I'm getting long. Just like this one here, right? We closed up here. Market came back, pulled back, then came back up through it. and you got another, you got some more points out of it. Here's a nice stacked imbalance. Again, market came back down. It wasn't until this bar. This is the bar you should be getting long. 55-ish area, shot up to 60. Okay, here's a couple buying imbalances. It looked like it was going to run. You ran later, didn't run here, and just sort of came back down. Here's a couple more buying imbalance. There's a stack selling imbalance. Went lower. Okay, not much lower. But again, on volatile day like this, I just find it easier to scalp rather than try and take, this is my position. This is my hill I'm going to die on. I know there's volatility, so I know there's going to be plenty of opportunities. I don't kick myself that, I only made, 2 points, 3 points on this move. When you see other moves making 20, 30 points, because, I know I'm going to get plenty of opportunities, right? I'd rather get the base hits rather than hit the home run and a lot of strikeouts. Another thing, that I tested out a little bit, but, bars that have multiple imbalances, multiple stacked imbalances, like this one, this one, this one. Theoretically, you think, there's a lot of buying pressure in there. It should be a stronger signal. Yeah, yes and no. I mean, I didn't find anything really. The markets tend to continue moving there, but it wasn't like an 80% win rate or something like that on getting them. I mean, it was okay, but you still got to manage your trades. I mean, it's a great directional clue. Obviously, stack buying and balance. But again, look at these volumes. It's 17, 19, 17. It's quite small. That just gives you an idea of the volatility that's taking place here. Okay, so anyway, we went up, we rallied all the way up. Is this the one where we got all the way up to? No, that's not the move. But again, you're getting the idea, right? Look for those imbalances. Look for the continuations in the next bar. Okay, so anyway, we got all the way up in here. These new highs, new highs, new highs. Up here at these highs, I did have a reference based off of value areas from earlier, right around this 25. But again, it got up towards these highs. Now all of a sudden you're seeing the selling coming in. I mean, decent selling. You're up here at a high, strong negative delta, 858 minus 900 minus 1100 as you make that high. I mean, earlier, there are some bars with some negative deltas coming in here, trading much lower, obviously, but minus 1,000 down here, way down here, but it shot back up, right? So anyway, we're at the highs of these days, new highs of the day, right? And I've been talking about this for a while. When you're at new highs of the day, especially late in the session, watch for selling coming in. You can see the selling coming in here, right? You're not seeing the buying anymore. Now, I didn't expect this move to be so dramatic on the sell-off, but it just took off, man. I mean, you're seeing right up in here, right? The high at 25 and a quarter. You got these buying imbalances here. I'd hate to be that guy that bought this high up here. There's the 8 to 136. These imbalances, they're just, hopefully they got out at least 10 points lower rather than 100 points lower. But, as we're coming down, we're starting to see these selling imbalances, right? On the way up, buying imbalances, obviously. On the way down, selling imbalances, okay? We're seeing in here some buying imbalances, no follow through. This inverse imbalance, which is actually bullish, no follow through here in the next bar, right? And just sort of going sideways with point of controls more or less lined up. We sort of make another run back up here. Then you're seeing the selling imbalance. Now here's the trap traders one where it kind of paid off quite nicely. On our Orderflows trader software. Good news, we're going to be doing an upgrade, releasing the new upgrade probably in a few weeks, and there's some nice changes in there. Inverse imbalance here. I have it turned off, but I'll turn it on. It's going to show you these areas where these trap traders, but anyway, on the new version of Orderflows Trader 6, you're going to be, I was telling my programmer when he sent me over the copy, it is like the difference of watching a black and white television versus watching a color television. And so anyone that's got the this version of Orderflows Trader or a previous version of Orderflows Trader, the upgrade is no cost, right? So you don't have to, some people, they like to have release software, then do an upgrade and charge you for the upgrade, Microsoft. But we don't do that. So as long as you get in, future upgrades are no cost. So here, right, you can see it's before it was red, now it's blue because we call this an inverse imbalance. This is bullish, and you can see you got a nice move up, right? People say, well, it's only it's not a big move. Well, it's a move from the 02.5 area up to 08. I mean, did get up to up here, but realistically, 2 up to 6, 7, that's 5 points, right? Here's a bearish one, right? This dark red, right? It's blue for bullish, dark red for bearish, and this one is just like started selling off, keeps coming back in here, right? Keeps coming back up into that area, and then obviously the market just fell over, right? And I mean, these moves, this is a 30-second chart. Look at some of these bars, how the volatility, 75 up to 89 on a 30-second chart. Scandalous, to say the least. But that's what the market's going to do. So yeah, again, look at those stacked imbalances. There's plenty of ways to take advantage of them. I like to see them and sort of trade in the direction if they're coming in. They're coming in here, right? I can get short in this bar. There's another stacked imbalance. I could be getting short in this bar. There's a lot of opportunities with stacked imbalances because oftentimes it's just the result of a big order that needs to be executed fast, right? I mean, when Tudor calls the execution desk, hey, sell me 1,200 E-minis, just get it done. The execution trader's not going to dick around because he knows if he screws up the order, Tudor's going to put him in the penalty box and not give him any more orders. So he's just going to get it done. And on a market that's selling off, yeah, sell me, 500 S&Ps, done. Okay. Next thing you know, you sold your 500 at, market's trading 85. You sold your 500 down to 84. Then the market's trading 80. You're looking golden, right? Because this market is moving. So anyway, guys, I hope you guys got something of value out of this video. Be sure to like and subscribe to my channel. Like the video, subscribe to the channel. And, again, thanks for taking the time out of your day to watch one of my videos. Bye-bye.